Welcome to the Complete Volume Profile Trading Guide. I'm excited to share with you one of the most powerful yet simple trading strategies that can transform how you approach the markets. In this comprehensive guide, we're going to break down everything you need to know about volume profile trading, from the absolute basics to advanced practical applications. Whether you're completely new to volume profile or looking to refine your existing knowledge, this guide will give you the tools to master this incredibly effective trading approach. By the end of this presentation, you'll understand exactly how to use volume profile levels to identify high-probability trade setups, manage your risk effectively, and develop the confidence to trade these levels consistently. So let's dive in and start building your volume profile expertise.
So, what exactly is volume profile, and why should you care about it as a trader? Volume profile is a technical analysis tool that shows you exactly where the most trading activity has occurred at specific price levels over a given time period. Think of it as a horizontal histogram that reveals the market's true interest zones. Unlike traditional indicators that just show you price movement, volume profile shows you where the real action happened. It answers critical questions like, where did buyers and sellers actually transact the most? Which price levels saw the heaviest volume? Where is the market likely to find support or resistance? Here's what makes volume profile so powerful. It's based on actual trading activity, not just price movement. When you see a big spike in volume at a particular price level, that tells you something important happened there. Either buyers stepped in aggressively or sellers dumped their positions. The beauty of volume profile is that these volume-based levels tend to act as magnets for future price action. Markets have a tendency to return to areas where significant trading occurred, making these levels incredibly reliable for both entries and exits. This isn't some complicated indicator with dozens of settings. It's pure, raw market data that shows you exactly where the smart money was active.
Now you might be wondering, with all the indicators and strategies out there, why should volume profile be part of your trading arsenal? Let me give you some compelling reasons. First, it's data-driven decision-making at its finest. Instead of guessing where support and resistance might be, volume profile shows you exactly where they are based on actual trading activity. When you see heavy volume at a price level, you know that's where institutional players and smart money were active. Second, it gives you precision entry and exit points. You're not drawing arbitrary lines on your chart, you're identifying specific price levels where the market has proven it will react. This precision translates directly into better risk-reward ratios and higher win rates. Third, it works across all timeframes and markets, whether you're scalping the ES futures, swing trading stocks, or analyzing Forex pairs, volume levels remain relevant. The principles are universal. Fourth, it's objective and removes emotion from your trading. When you see a clear volume profile setup, there's no guesswork involved. The levels are either there or they're not. This objectivity helps you avoid the psychological traps that destroy most traders. Finally, it's surprisingly simple once you understand the basics. You don't need a PhD in mathematics or years of study. The core concept can be learned quickly, but the edge comes from repetition and experience. Volume profile isn't just another indicator, it's a window into market psychology and institutional behavior. Before we dive deep into each component, let me give you a bird's eye view of the key concepts that form the foundation of volume profile trading. The value area is your starting point.
This highlighted region represents where 70% of all trading volume occurred during your selected time period. Think of this as the fair value zone, where buyers and sellers were most active. This isn't arbitrary, it's a statistical representation of where the market found equilibrium. The value area high, or VAH, is the upper boundary of this zone. When the price trades near the VAH, we consider it at a premium, meaning it's relatively expensive compared to where most trading occurred. This often becomes a resistance level where sellers step in. The value area low, or VAL, is the opposite, the lower boundary representing discount pricing. When the price drops to the VAL, buyers often see it as a bargain and step in, making it a natural support level. The point of control, or POC, is the single price level with the highest volume. This is where buyers and sellers were most active, making it the truest representation of fair value. The POC often acts as a magnet for price action and can serve as both support and resistance. High volume nodes are additional volume clusters outside the main value area. These make excellent take-profit targets. Low volume nodes are areas with minimal activity. Price tends to move quickly through these zones. Each of these concepts builds on the others to create a complete picture of market structure. Don't worry, if this seems like a lot right now, we'll break down each element in detail so you fully understand how to use them in your trading. Now let's get into the nuts and bolts of the Fixed Range Volume Profile, or FRVP. This is the specific tool we'll be using for our trading strategy. When you draw a fixed range volume profile, you're essentially asking the market, show me exactly where all the trading activity occurred between these 2 points in time. The result is a horizontal histogram that reveals the market's true structure. Here's what you'll see when you draw it out. You'll have bars extending horizontally from the price axis, with longer bars representing higher volume at those price levels. You'll also see a highlighted section. That's your value area, where 70% of the volume occurred. And you'll notice a line extending from one of the bars. That's your point of control, the level with the absolute highest volume. The beauty of the FRVP is its simplicity. You're not looking at dozens of indicators or complex calculations. You're seeing pure market data, where real money changed hands, where institutional players were active, where supply and demand actually met. Think of it like a heat map of trading activity. The bright spots show you where the action was intense, and those are the levels that matter for future trading decisions. The quiet areas? Those are zones price will likely move through quickly. This visual representation makes it incredibly easy to identify the key levels you need to watch. No guesswork, no interpretation required. The market shows you exactly where the important levels are. The value area is absolutely central to everything we do with volume profile trading. So let's make sure you understand exactly what it represents and why it's so powerful. The value area encompasses 70% of all trading volume during your selected time period. This isn't a random number. It's a statistical representation of where the market found its equilibrium. Think of it as the sweet spot where buyers and sellers were most comfortable transacting. This highlighted area tells you several critical things about market sentiment. First, it shows you the price range where institutional players and smart money were most active. These aren't retail traders moving the market. This is where the big players made their moves. Second, it represents the market's consensus of fair value for that time period. When 70% of all trading occurs within a specific range, that range becomes magnetically important for future price action. Here's what makes this so tradable. When price moves away from the value area, it's moving away from fair value.
If it goes above, it's trading at a premium and likely to face selling pressure. If it goes below, it's trading at a discount and likely to attract buyers. The value area acts like a gravity well for price action. Even when price breaks out of the value area, it frequently returns to retest these levels before making its next major move. Understanding the value area is like having a roadmap of where the market considers prices to be normal. Everything outside this zone is abnormal and likely to revert.
Thanks so much for watching today's video. I really appreciate you taking the time to tune in. If you enjoyed it, make sure to follow me across all platforms so you don't miss future content. Down in the description, you'll find links to the brokers I personally use, some backtesting software I recommend, and of course, our free Discord community where you can connect and learn alongside other traders. I'll leave you with one of my favorite verses, Isaiah 41:10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. And as always, remember, strive for progress, not perfection. I'll see you all in the next one.